for joining our webinar. For those of you who read our description, you'll have a good idea of what it's going to be about. But just in case you don't, we're going to be talking about rewards programs and loyalty programs in financial services and what role AI has in enhancing those programs. We're going to be relating it to a lot of what we do, but also talking about the broader industry. So we're going to be hearing from Irlon Terblanche, who is Head of Operations and Insights for Sanlam, who's got the biggest kind of rewards program on the continent. And then we'll be hearing from our own Eric Newby, who's Head of Product, and Matthew Hindley will be leading the conversation. So I'm going to hand over to Matt now, who will be doing some introductions and introducing the topic more.
Awesome. Thanks, Nicola. Just wanted to welcome Eric and Irlon. I can't see Irlon at the moment, so I'm assuming he's still on, and we are. I can see you. Good. Okay, good. Welcome, everyone, and thanks for the intros, Nicola. I'm super excited about this conversation. I often talk about the watering hole, which you would have all seen in the narrative around this conversation, and having a digital watering hole for organizations and businesses. I learned about a few years ago, I was talking to an executive in the insurance space. It was part of one of the large banks. And he was talking about how difficult it is for an insurer to embrace AI technologies, any technologies in their space, because they don't really have any digital watering holes. Their clients get onto their digital assets, log on, buy a product, and then hope they never have to use the product. And that's the interaction they have. That makes life quite difficult for them to have this dialogue with their customers in a digital world. But then if you bring in the world of rewards and loyalty, and there's a lot of great insurers, including Sanlam and many other businesses that have started leveraging loyalty to create this watering hole. Because the subject brings in so much excitement for the world of AI, the world of personalization, hyper-personalization, and a lot of the topics that we're going to talk about, I'm very keen to have both Eric and Irlon talking to us today. Just to mention that Irlon not only is the Head of Operations and Insights for Sanlam, very much working in their reward space and going to be operationalizing one of the continent's biggest rewards platforms. He's also a passionate teacher and has a lot of top-rated Udemy courses, which are really great. And with Eric has, obviously he's head of product at Ecosystem and has such a deep knowledge of behavioral science with his PhD. He also came out of the Discovery Bank world, where obviously we know where behavior and rewards plays a massive part. So having those two views makes this a very exciting conversation. I'm going to kick it off on that narrative, and to set the scene, Irlon, working in one of the most complex loyalty programs in the market, from your experience, how have customer expectations around rewards and engagement changed in the years?
Okay, so I can give you my personal take, and I will give you some facts. Personally, I think the apathy remains quite a thing. The rewards are just not worth the effort in general. Like you get 1% of your spend or 10% of the liters that you fill up at the garage. And you've got all of these disparate loyalty programs, so many currencies, so many cards, so many apps. And then you've got all the hurdles that you've got to go through. You've got to have a minimum spend on a particular type of card. You've got to have X, Y, Z products before you qualify for your rewards. You've got to do the health checks before you can get to the next tier. Man, it's painful, right? And then on top of that, the rewards are being whittled away at year after year. And I mean, I know this because I used rewards in previous lifetimes. I use it today. And every year when you got to show an increase in your net profit from the previous year, you got to find some place to shave off the costs and other places where you want to drive up the revenue. And the funding for rewards are often a victim of the cost shaving items. So how can we fund fewer rewards? I mean, you would see some of this. If you are a frequent flyer and you go to the airport lounges, if you are with eBucks, for example, you would get X number of free visits to the lounge per month. Over the years, that was gradually whittled away. Then your family could go with you, then they couldn't go with you. Or like with Sanlam Reality, we will offer you a discount on Uber, but unfortunately, we can only afford to give you the discount between 10 o'clock at night and 4 a.m. in the morning. I mean, it just sucks, right? I'm being deliberately harsh just to drive home the point that things like this don't make it easier for consumers to get excited about rewards. Even despite this move towards personalized rewards, everyone is talking about personalized rewards. I don't yet see that consumer expectations have improved. My personal take is that people have become a lot more loyal to the discount and the reward quanta than the actual brand. Now, let me give you some actual stats. If you guys are interested, there's a Truth and Brand Map 2025 loyalty white paper. There's a lot of research about loyalty in South Africa that they've distilled nicely. According to that paper, about 82% of South Africans are using loyalty programs compared with 76% back in 2023. So it's going up. About 37% of our mass market is not engaging in loyalty programs. They've got lots of interesting stats. I'll mention a few. The main reasons why people don't use loyalty programs are, there's a couple, I'll show you a few. The top one was, I don't spend enough to earn decent rewards. About 22% of the survey respondents said that. It takes too long to earn rewards, about 15% of respondents. And then 12% said, I'm just not interested. When they were asked, and I'm talking about fuel and groceries now because we're trying to bring those two into our ecosystem as well. When it comes to a consumer's choice of grocery brand, they first consider price and then convenience. Convenience could be location of the shop or deliveries before they consider the loyalty program. For the choice of a fuel station to fill up your car, the first consideration is the proximity to your home or work, and then the loyalty program. So in summary, Matt, expectations haven't improved. It may even have gone the other way. They're more loyal to their discounts than to the brands. And that's why I think that there's huge potential for us to completely turn this thing upside down and make something amazing out of it. I'm not allowed to talk too much about what we are doing, but we are tackling these items very specifically.
Eric, from your product and science lens, how has the definition of loyalty shifted, and then how does AI play into that transformation?
Yeah, so I think, a lot of it aligns with the things that Irlon was saying, and it's about how you can use personalization and AI to address some of those concerns. Loyalty programs traditionally are, it's your watering hole, but I hope you like the same water every day and all you're getting is water. And there's also 3 elephants that are using the water hole at the same time as you. So we have to ration it, and each person only gets a tiny bit of water, even though you're not an elephant yourself. It's to make that watering hole more relevant to you. And if you can start getting to the space where you are giving people truly personalized benefits based on who they are and how you want to engage with them, it deals with a lot of issues. The first one is, if you, as a company, have the same benefits all the time, like, there's kind of people will come to your watering hole in the beginning until they learn how the program works, and then they just come when they need it. They're there more than they're buying insurance, but there's no incentive to keep going. And that's why sometimes you get this pressure of like, okay, cool, now we need to launch a new version. And that means we need to take away from somewhere else. I think that's also part of why rewards get eroded. Everyone loves the slow lounge. Everyone knows about the slow lounge now. Like, we need something new. So we're going to launch grocery discounts. Okay, but we have to pay for that. We'll just chop off some slow lounge benefits and then we'll add the groceries. But now people like groceries, so can't get rid of that. So next year, if we launch something else, we have to get rid of some other things as well. And because if you're offering everything to everyone, then you can't, there is no personalization and everyone gets the same thing. You have to deal with the super users. So the people who are like, awesome, can get all of these benefits. I'm going to get all of them. I'm going to jump through every single hoop. And this company is going to pay me like 6,000 Rand a month, and I'm going to give them 200 Rand a month. And it's great. And because you have those people, you have to build in rules. But if you can talk to each person and say, we'd like to offer you this, we'd like to offer you this, you can create a much more compelling watering hole that people want to come back to because they are receiving value. And yeah, maybe your customer who wants 6,000 Rand out of you, they might go somewhere else, but they are not the majority. The majority is everyone else. You'll actually have a more balanced system where it's not like everyone else is paying for those people. I also think it's an interesting way to create differentiation. There is something to be said about the excitement of getting new and different things. Everyone has a fuel benefit and a groceries benefit, and like you'll just go where is a combination, whatever balance of convenience and discount is the most relevant for you. But something that was an interesting kind of contrast to that discovery when it was kind of new and fresh was they launched this active rewards program where you get a free smoothie. People went crazy for it, and like had a real big impact on behavior, and you get your own goal each week to do a certain amount of exercise, and if you did enough, you get your smoothie. And it was people who actually normally they wouldn't even want a smoothie, but it was this goal to chase and this different sort of benefit that they were getting, and that had a real impact. So I think having this AI-based personalization is also a way to add differentiation to your program without necessarily being like, oh, cool, they've got 15% of groceries, we need to go to 17.5%. It's like, cool, we don't always have 17.5%. We have discounts that are relevant to you, but it's cool and exciting and it changes and it's novel. And it's not just novel in the discount to them. You can have a whole lot of partners. You don't have to not everyone gets water. You can have a whole lot of things. If one time you come to get groceries, but the next time you can get a discount at Nando's, depending on what works for you. So I think that all of that is in flux at the moment. I don't know that anyone's completely cracked it at this point. If people get that right, it'll be quite a compelling watering hole that they can create.
Thanks, Eric. I'm glad we're still around the watering hole and that metaphor. This really also plays in your world where you're part of the largest insurer on the continent with a ton of different companies that form part of this group. And the members or the visitors to that watering hole would be incredibly different with the different needs and how they interact with a rewards program or a watering hole. What does a healthy and engaging rewards ecosystem look like in a space like yours?
A healthy, engaging rewards ecosystem is one where I see at least two things. One is competition, or rather cooperation between the various rewards ecosystem partners. Cooperation trumps competition, and I'll talk a bit more about that. And the second is focus on the customer first. We adapt to their evolving needs and preferences in real time. Now, let me come back to the whole cooperation needs to trump competition thing. And I'm going to give a very real example. I am in an ecosystem where we have, amongst others, a bank, asset manager, and a whole bunch of long-term and short-term insurance companies. Now along comes Matt, and Matt needs a savings vehicle. The bank may want to push a savings account or possibly a fixed deposit. The asset manager may want to push a unit trust or some other investment product. The long-term insurer may want you to take up a preservation fund. What I'm trying to illustrate, and this is just one example, is that you've got businesses competing for the share of the same individual. What happens is that in real business, the profit objective and marketing constraints and all those things actually are what typically results in what offer Matt will get, as opposed to what Matt actually needs at that particular point in time. So if you're able to get to a place where we give Matt what is tailored for Matt when Matt needs it, we need a major mindset shift. And this mindset shift is one about, if you focus on the customer first, offering him or her the personalized rewards or products, not only will you get a higher likelihood of an immediate uptake, an immediate redemption, an immediate click-through, you're also going to get an ongoing redemption, ongoing spend, ongoing offer take-up into the future. You are basically going to be maximizing the lifetime value of the customer as opposed to just getting a once-off win today. And this is sort of my segue into reinforcement learning, because I love how reinforcement learning techniques have been used in recommenders over the last year. So I'm quite passionate about that. You'll see a lot of that passion come through when I keep talking about this stuff. It's also one of the best ways for real-time personalization that we're going to get to later, because reinforcement learning, or can frame the user journey as a sequential decision-making process. It is ideally suited to not just maximizing an offer take-up today, but also ensuring ongoing cumulative profits in the future by adapting to the evolving needs and preferences in real time. The RL recommenders that have worked well in very recent history were able to achieve what the traditional recommenders couldn't. They are able to optimize both the immediate and the future wins. And that's what I like. Because of that, you get this thing called the partner spillover effect. And members who redeem at partner A are likely to spend up to 1.4 times more at partner B within 30 days. So then you get evidence that this whole ecosystem flywheel is working. And for me, that is what a healthy rewards ecosystem looks like.
Eric, with your ecosystem.Ai product hat on, can you think about how the real-time and personalization that Irlon referred to is reshaping this entire experience?
Sure. At a conceptual level, the way that people behave and how they react to things is hugely dependent on their context. That context is the history of the journey, the moment that they're in now, what they've just done, what they're currently doing. And if you can't engage with people in real time, you can't take that context into account. You can try. So often we see that people will say, okay, we'll do predictions once a week, but then we'll need a rule that if someone's wallet is below this level, we don't offer these. But we'll also need another rule, and you end up with this complicated labyrinthian rule structure. It ends up actually not being that effective. So even though you can try to do it, it doesn't really work. You lose the ability to engage with people in the moment if you're not in real time. If you can engage in that moment, you are just in quite easy ways, you become so much more impactful. Just thinking about offering people things about like relevant to the location that they're in, or I mean, there's silly examples like don't offer someone a savings account if they've just taken up a savings account. It sounds really dumb, but if you don't have real-time capabilities and you go into the app and you like apply, open, transfer, there's a very good chance that the next screen you see will say, hey, Matt, would you like a savings account? Because you obviously had a high propensity of taking it up and it got set up a week ago, and they don't have the real-time data to check that you've just taken it up. So there's huge benefits in being real-time and how effectively you can engage with people. It also, I think in our mind, kind of, there's a couple of components to real-time, all of which had benefits. So there's like the real-time data, which I was talking about, and serving, which is producing the results from your model or intelligence. But there's also real-time feedback that has a big impact and ties into what I was talking about in the reinforcement learning space. Is one of the things we're quite passionate about. If you are engaging with people, you should be able to define success in some way that is measurable and quantifiable. And the more immediately you can capture that success and learn from it, the more effectively you can engage with people. Sometimes it will have a built-in delay. So potentially if you want to define success as like opening a preservation fund product and it's a whole manual process and you have to be KYC, there's a lag, but still capture it as soon as you can. Often in the digital space and the reward space, success can be measured pretty immediately. If we offer you something and you ignore all of it, we shouldn't be offering you that same stuff, or we should be less likely to offer you that same stuff the next time you come in. Even if you go back in again immediately, or if you do redeem a voucher, that's strong evidence that there's things you're interested in. So being able to not just know what the moment looks like in real time with the data and engage with it by serving, but also have that real-time feedback to enable you to learn is hugely powerful and can take advantage of opportunities much more rapidly. You can pick up, I don't know, like there's load shedding and people can't cook dinner. Suddenly lots of people are keen for vouchers for takeaway. But if you're not learning in real time and seeing that this is now more popular, start recommending that, you'll go back and look at your dashboard a week later and be like, oh, cool, isn't it interesting that on Tuesday night during load shedding, when we offered people restaurant vouchers, they were more likely to take them out. Would have been cool if we could have taken advantage of that. People learn when stuff is relevant to them, so if people know that the things that they're seeing, and it's not like maybe the technical people will be like, oh, cool, this learned, but people just get this gut feeling that there's interesting stuff here and it's worth looking at. So yeah, I think it's just a whole different space. What's interesting is sometimes it's actually less technical load to be real time, because if you're doing things in batch, let's think about one of the big banks. If they want to generate recommendations for people, but we have to do it in batch. So now we have to run our entire base through this model overnight when all of the other batch things are running, because this is not going to be your only batch job. And you score however many millions of people. And then during the week, 10% of them log in and receive the offers. You've done a huge amount of redundant effort all at once when a lot of other batch things were running. Whereas if you're generating things in real time, as someone comes in, that's the load, done when it needs to be done. Yes, you get peaks that you have to deal with, but in our experience, once you are set up for real time, your actual load goes down. You're not needing to do all this redundant work at the same time. It's not like I need to process the whole base over these 2 hours a night. I process people when they come in. So.
Yeah. Talk about real time. Imagine you're at a Woolworths or a Pick and Pay and you're down the aisle looking at the chocolates, and one of the shop assistants sees you looking at the chocolates and then watches you walk out. And then tomorrow runs across the road when he sees you again and says, hey, I saw you looking at this chocolate. Do you buy it? Yeah. In your world, I know you are looking at real time and hyper-personalization very seriously. How would this change your member experience from the more traditional and batch-based campaigns?
Okay, Matt. Well, we are still in the process of building. So I can tell you, before implementation is complete, and what we are aiming to do, we are aiming to start with mobile interaction-driven data from which recommenders can learn immediately. This interaction data is swipes, taps, pauses, scrolls, searches, both within a session and across multiple sessions. The idea for us is that we don't need loads of historical data to train supervised learning models so that we can go live with some kind of personalization on day one. So all that additional data will come in time, but this is certainly the way I've sold it to our coalition partners. Don't worry about the data sharing stuff just yet. We are going to be learning using the user interactions with our app. I shouldn't really say too much more about it, but that's in a nutshell where we are going. Can't say too much more just yet, but I'm happy to talk about others that have implemented real-time personalization, if you'd like me to.
Yeah, absolutely. Happy for you to jump in.
All right. So I can talk about three groups. In the streaming business, I'll talk about Spotify. In retail, I'll talk about Amazon. And I'll talk about financial services, banking, and insurance, just a little bit generically. Spotify is an interesting one for me because there's a guy by the name of Tony Jabara. He actually started out his career at Netflix and got them onto the personalization train. He subsequently left. He's now at Spotify and they've done some amazing stuff there. So my boss, Johan, will typically say we're trying to build the Netflix of rewards. Well, Spotify has done some amazing stuff too. So I'll talk to you about them. In a nutshell, they started implementing reinforcement learning for the podcast recommenders in particular back in 2021. They achieved an 81% increase in 60-day listening time after applying that RL mechanism. The overall engagement metrics went up, so they rolled out RL more broadly. And it was pretty nice because more listening time leads to more ad impressions that you can give to free users and a higher likelihood of retention of your paid-for subscription customers. Now, they did have a couple of challenges. Getting the stakeholders to buy into the new way of doing the predictions was a problem, but they've been doing really, really well. So Spotify is one that I keep my eye on quite a lot. And then the other one that I keep an eye on is Amazon. Now, why Amazon? Is because the loyalty platform that we are implementing, one of its personalization modules runs on top of Amazon Personalize. And Amazon actually has two personalization offerings that they have built for their clients, and they offer it as a service. So it's Amazon Personalize and SageMaker RL, I think, is the other one. Now, they historically relied very heavily on collaborative filtering and similarity techniques, and only started experimenting with RL back in 2021 for real-time personalized dynamic recommendations. In 2022, they demonstrated using a contextual bandit, a promotion engine for a cashback app called iBotter. Now, I heard about iBotter, but I didn't know that it was powered by Amazon, so that was interesting for me. But in any case, with this iBotter case study, they were able to build a bandit recommender that was able to increase the redemption, the offer redemption rate. It was something ridiculous, like 59% increase in redemption rates compared to 11% on the previous recommenders. So that was a pretty staggering one. And then if I bring it back to banking and financial services, that's where I feel more natural because I've come from that world. I've seen the banks typically use the combo or hybrid approach, where they will combine the traditional predictive analytics, predictive models with something like reinforcement learning. So you first use machine learning to predict the uptake propensity of a particular offer for a particular client, and then you'll use the RL to optimally sequence the offer over time, which is pretty cool. I can also talk about some specific use cases, some very interesting ones. In one of the banking pilots, it was demonstrated that the RL could literally guide the call center agent. How about that? It literally suggests the next action of conversation to the agent as the conversation is happening. In insurance, there was one where an RL-driven recommendation engine was able to increase the number of add-ons per policy. It learned the customer profile, saw where the customer was in its journey, and was able to get more customers to sign up for either additional roadside assistance or rental car coverage. There were a couple of others, probably not as exciting, and I don't have exact percentage numbers, but what I can say is this: just a small percentage increase in product uptake in banking or a few percentage points reduction in churn in insurance, they both lead to millions in terms of revenue saved or revenue earned. So it's absolutely having an impact. I don't see it yet having been implemented large scale, though. You guys might know better.
Thanks for those examples. I want to talk a little bit now more around sort of the behavioral science meets machine learning. I'm going to sort of direct some conversation towards Eric. But you mentioned Spotify, and the amount I've learned about, and from an ecosystem point of view and Exidium point of view, we often talk about Spotify and some of the models they use, which are incredibly powerful. I'm really nervous about what Spotify thinks about my music taste, because my daughter spends a lot of time on my Spotify account, and there's a lot of dance monkey and something coconut, and then I'll listen to folk music, and then I'll listen to gym music. So I don't know what it thinks of me, but from a behavioral science point of view, Eric, how do behavioral science principles influence the way you build AI models for a rewards platform?
Sure. So I think there's a couple of layers to it. The first one is to build things with a foundation of some sort of behavioral personality construct. Spotify is actually a useful example, because there's a few tech companies around the world that have built these, but Spotify kind of exposed as. So for those of you who use Spotify, if you've seen the Spotify Wrapped personality, which actually became quite a thing. It was like news articles written about it, and people were kind of excited to see what their Spotify personality was. But the idea is they've basically taken the Myers-Briggs personality type construct and applied that sort of thinking to their data and environment. So it's not saying based on what music you listen to, we can tell what your psychological personality is. It's saying, can we take that psychological construct and apply it in the Spotify environment? So you get your kind of 8 different or 4 dimensions, and you can be exploring different types of music, or you like listening to the same things on repeat. And, there's a bunch of dimensions of your Spotify personality. So the one thing we do is build out those personality constructs. So personality of how your digital interaction personality, your level of habitual behavior, exploration, and action planning. We also have things around financial services, spend personalities. How does the way you're transacting tell us about your relationship with the company? So it's kind of all around saying, define a social construct and then look for indicators of that construct in your kind of the data that you have with this company. So whether that's how you're using the app or how you're spending or the locations you're visiting. A lot of our stuff is built off those personality type constructs. The algorithms that we build are with that lens in mind. The fact that we have such a focus on real time comes from thinking about behavior, because we know that behavior is impacted by the context that you're in. And in order to engage with that, you need to be real time. The same for reinforcement learning, so the way that we build and design the algorithms that we use to engage with people is based on that behavioral science understanding as well. So it's kind of built in everywhere, but then we also have these kind of personality constructs. So just the way that you engage with people, so that the wording, the images and the colors are not necessarily the offer that you're making, but how you talk about that offer can have a huge impact on how likely people are to engage with you. And we put a lot of effort into coming up with meaningful behavioral constructs to help people craft that content. One of the more specific generative AI benefits for us has been that can now be scaled. So we have an issue with that before was like, Jess in particular has kind of got a lot of experience with crafting that content, and we could help customers do it and give them advice and frameworks and things, but it's hard to scale that. But now with custom GPTs or fine-tuned generative models, you can actually give people a big hand up with that. And that it's shocking until you've seen it a couple of times, how big of an impact, using the right behavioral constructs just in your messaging can have. Like we did a POC recently with a company, and we were speaking to people about exactly the same thing. What we did was have different constructs for the messaging compared to the way they were currently messaging. Using the right constructs had a 90% uplift in engagement, which is a crazy number, right? So you're not offering them any more, you're not spending more on the campaign, you just write the messaging in a different way and almost double your take up. And obviously, that number vary across whatever specific application you're looking at. I think it's an interesting example of the impact that applying some behavioral thinking can have. So yeah, it's across all levels.
Let's talk a little bit about challenges and opportunities now. What have been some of the biggest real-world challenges when implementing AI in a live rewards environments? And where have you seen the biggest returns? I know you guys are still very much in build phase, but you're an educator in the space and you've delved quite deeply into the space. Are you seeing the big challenges and the opportunities?
Okay, the big challenges, I'm speaking through my personal lens here, my personal experience. The big challenge typically sits with business, getting business to buy into these personalized recommenders, right? It's a case of, are these recommenders actually going to be better than my traditional predictive analytics and propensity models? How do I trust that these things are going to give me a better uplift, whether it's a VNB uplift or increased liability balances in the bank account? they're gonna struggle with these sort of things, number one. Number two, it is in direct competition to their typical marketing objectives. If you are running a P&L, you have certain marketing plans, you have certain sales targets, and you are going to drive those very hard. Along comes Irlon and he says, can you just adjust this a little bit, take your foot off the pedal? We're going to go with these personalized offers. It's a difficult thing for them to get their head around. We all talk about personalized rewards, but when the rubber hits the road, it's a different thing. I can guarantee you that. So we are going to have to get to a place where we can provide real demonstration. For example, running these models in parallel with the existing business, and then at some point doing a comparison in terms of, see, this is what our models would have resulted in, and this is what in real life actually happened. And you give them something to compare, number one. And then the explainability is going to be key. Because we are going to be dealing with so many different partners, we have to be able to, with confidence, say, this particular offer was presented to Matt because of X, and it was presented to Eric because of Y. They're going to need to know that, right? So that's the first thing. It's just getting the business buy into the whole process. I mean, I can talk a little bit about typical troubles like cold starts for those who don't know. It's just what happens when you've got a brand new set of customers or new catalog or rewards product. There's no historical data to make a meaningful recommendation to them up front. So that's the cold start. But we've got lots of ways of dealing with those. And then again, depending on the situation, data sparsity. So both interaction data sparsity and rewards data sparsity can be a problem. I've seen this in banking, for example. So with a bank or with an insurance company, you're not going to interact with them that much. And you are probably only going to accept or reject some kind of offer once, maybe twice a year. So there's not much for an RL agent to learn from. But there are other techniques, such as bringing in transactional data as a proxy for what the customer's service or needs are, and training based on that. Then the delayed rewards, I saw specifically with advertising, not only have they got very delayed rewards, they've got extremely sparse rewards. So how does the RL agent know that a conversion next week was the result of an ad impression that was displayed today? They've got techniques for how they sort that particular problem out. Those are significant trivial challenges. The infrastructure side of things as well. The continuous streaming and storing of the interaction data from which the models need to learn. I'm very excited about this space, but it comes with its challenges, I guess. So we go in with the eyes wide open. But in terms of the benefits are clear. You get the overall lifetime uplift, right? So RL will optimize both for immediate sales, immediate redemptions, but also for longer term engagement. And when you've got your longer term engagement, there's more ads that you can present to your users. And there's also lower cost of communications because you don't have to communicate as frequently to get them to come back to your platform. So the benefits are absolutely there. It's tricky.
Eric, what pain points do you commonly encounter when companies try to move from more static rewards to intelligent ecosystems? And how do you guide them through that journey?
So I think the big one is, well, one of the first big ones is something that Irlon actually already mentioned a bit earlier, is the data question. Often the objection is like, okay, cool, but we're 2 years into our 10-year customer-centric database project, so we can't really do anything until we have that. And then it actually is a 20-year project or whatever. I don't think I've seen a completed customer 360 database project. But the best data to figure out how someone is going to engage with a specific platform is the data of them engaging with that platform. It's far more effective to switch it on and like log your data continuously, start learning, set up your RL correctly so that you can build up that intelligence that you need, rather than kind of spending a long time getting all of your different corporate systems to join together, and then it gives you a marginal benefit and you have to start learning anyway. So start learning now, and then your customer data is ready, it will add value. You don't have to wait for that to start engaging and learning, because the most valuable data source you're going to build up is by actually engaging with people. Something else that can be a problem is thinking about things in the right way to have the right level of variability in what you want to recommend to people. If you're a bank, you probably have like 600 products in the system, but you only actually have kind of 4 or 5 products that someone could buy, and you talk to them about, like, you're not going to have engagement data with them. You can offer them a rotating list of those 5 products every time they log in, and they'll feel like taking it up. But you need to start thinking about getting them to use those products more. What is on the journey of buying that product? Can you give them incremental things and little benefits? Or is it just about education? Maybe it's about educational content. I mean, it depends on the context, but it's about saying, like, how can you have, like, even if it's just personalized pricing or something that you can vary. So it's not just like, okay, we've got 3 things to talk about to this person because we've got 5 products, they already have 2, and all we care about is, are they going to buy these next 3 things?
Yeah.
Have the fanciest reinforcement learning system in the world, and it's going to tell you that no, they don't want these 3 things, and then so I think that's a big part of it. Ability and experimentation is also a key thing. It's a big focus of ours to log everything and have dashboarding and help people see the benefit of the system. Something that is sometimes a bit of a stretch to get people to engage with, but is very powerful, is to actually give some proportion of people random offers. So that has a bunch of benefits in terms of having clean data, but it also gives you a very clear uplift measure. If we were just doing nothing, this is what our benefit would be. This is the impact that the predictors are having, and you can have multiple different variations running at once and compare them to each other. But it gives you a good baseline to have to say, if we weren't doing anything, this is what it would do. And now that we are doing something, this is the impact that it has. So having that sort of clear and defined and dashboarded and done in a way that isn't too technical, because you want business people to be able to understand it. You don't want super complicated statistical measures and whisper plots and things. You want to be like, this line is higher than this line by this many million rands. So, it's worth it. That all needs to be easy to set up and maintain and all that sort of stuff in the back end.
Absolutely. I was going to jump into education, motivation, and human elements. I'm just looking at it. We're probably going to run out of time. But I've got to tell you, even with the Vitality platform, my financial advisor had to get somebody to coach me through doing the various steps to get me to a certain level because it benefited me. These programs can be quite complex. Getting into personalization, understanding a person like me is never really going to go and do all the bits and pieces to embrace the program. It's okay to have the Matt Hindleys in the program because there are others that will drive the program in the way it's supposed to. So just kind of wrapping up, what are your thoughts on stickiness and how things would look going forward with AI in loyalty? And then the same question to you, Eric, now when Irlon's done. And then hopefully we can ask the audience if they've got any questions.
Okay, so Matt, I don't even know where to start with that one. I share your pain. I've got to tell you, in an ideal world, and certainly this is what we are striving for, there shouldn't be any training needed. The app experience must be intuitive. It's as simple as that. The earn rules, we are doing our absolute best, and it's a battle. We want to simplify the earn rules as much as possible. The burn redemption process must just work. And what you can earn must be clearly visible for you, like right there on your screen. It must be based on your context, your location, the time of month. And what is available for you immediately, what the next best action is, must be right there without any endless scrolling and different tools. No manual or handbook will be required when we are hopefully done with a successful rewards app. That does require a little bit of fighting with the product owners, because I understand how you model these things. I've been on that modeling side of the world where you have to introduce the T's and C's or the hurdles so that you don't just give away the money. You can find other very inventive ways if you apply your mind to give a simple reward with minimal hurdles and uncomplicated additional conditions where no training is required. I can tell you from the FNB days, because if you guys remember the Steve ad campaigns, it was quite big in Joburg about 10 years ago. So we drove e-bucks into people's wallets by getting them to do very simple things. Swipe your card, don't withdraw cash. That's it. So when you went to the ATM, there would be a message for you saying, you're missing out on so many e-bucks, you could swipe your card. There was no other limitation. It was just swipe your card. Customers could understand that. And that's the kind of thing that we need to get to. Of course, it went more complicated since I left. So I will say proudly, that's not my fault. In the old days, we kept it nice and simple, and that's how it should be. And that is what we're striving for with our new rewards program.
I think for me, it is about, you have to think about people being on a journey. And I think the issue with e-bucks and discovery is because they're not personalized, they can't do that. And you joined too late. So you would have the same thing joining e-bucks now, right? Now, in the beginning, discovery was you get discounts at gym. That was it. It's like, it's better for us if you exercise, so we're giving you gym discounts. Cool, simple. But then they understood they needed something new. They needed to be taken further along the health journey or the e-bucks journey. So it's like, it's also good for us if you eat well. So we're going to have healthy food. People are swiping now. We also want them to be swiping in specific places. So we're going to add partners in. This is costing us a lot. So we need to tune things. And that will happen. The ideal world and what you can do now is say, that will be your journey, Matt. Because I think you would be surprised, like over the years, what you would engage with, and it can kind of test and see what you're willing to do. People who've been in the system for 20 years and people who've just joined should have the same reward structure. It's obviously going to be complicated for you when you've just joined because you haven't been on that journey. I think a lot of the education piece, if you can build the capabilities to take people on their own journey and customize things, and like I said, not have everyone gets the same thing all the time. So then you have to put in a million conditions to deal with the one elephant who's drinking all the water. You can simplify it through getting people used to it, like acclimatizing people to it. And it's not necessarily like acclimatizing them just for the sake of complexity. Over time, you'll want them doing different things. Wellness is a good example of that. If you think about becoming healthy, there's so much in that. The end point can be super complicated and involved, like taking mixes of supplements in smoothies and doing all sorts of things. But to start, if you try and start someone on that, that's crazy, right? You just like go for a walk every day for half an hour, Yeah. And then over time, you get them to the point where they are doing all the other stuff. So yeah, I think journeys and managing people's journeys in a personalized way is a big part of that.
Awesome. Do we have any questions? I know we're pretty much out of time, but are there any questions from the audience?
Yeah, I've put something in the chat if anyone wants to add something there. Otherwise, we will be having an open discussion about this very topic next week where everybody can speak and ask and share. Great, I think there is a question from Natia. Humans are complex and clever. If your rewards are too easy to earn, you will eventually sit with a few high users. AI should drive the next best action before the oak knows that it's his next best action. How to manage the risk?
Eric, what do you reckon? How would you manage that risk?
Yeah,
It's in the Q&A section.
So from my side, the ideal way to do that, to my mind, is that your rewards are personalized. It's not like you're saying, cool, you get 25% off at Checkers, and then people figure out how to abuse it. As you come in, we offer you a discount. And if you are costing too much, then the value of those discounts would go down. It almost removes the ability to have that abuse. If you don't have that, then you need to do things like the systems have of, okay, you get 25% off at Checkers, but it is limited to your 25% of your total spend in other places, and it can't be more value back than this much a month. And, there's a whole lot of ways you can put in rules to manage that. And I think people have gotten quite good at it. If you don't read the e-bucks or the T's and C's in detail, there's fairly standard ways of managing those risks in those cases. A much better way of doing it is just don't expose yourself to that risk. And don't say everyone gets 25% off that grocery. Say, come and find out what you get. It's not fixed. You get rewards, but they vary.
Agreed.
If there aren't any other questions, we will probably have to bring this webinar to a close. We are slightly over time. I see there's a question from Jay. Most loyalty programs are funded by the inactive members. What are your views?
There's a fair amount of truth to that. As the one who is responsible for the net profitability of these, yeah, I can see that. But it is something that we are actively trying to upside down. We set benefit utilization targets that we need to try and achieve. If only 20% of our members are enjoying the benefits, we say we have to get that to 75%.
Oh, that makes sense. Great. I think there were some really interesting insights here, and I think it just brings to light the potential that loyalty programs have in the AI world. Thank you so much to all our speakers, and just a reminder to everyone that there will be an open discussion on Meetup if you're keen to join that. So yeah, thank you so much.
Irlon, thanks Eric, and thanks Ecosystem for putting this together. It was a great session.
Yeah, thanks guys. Nice to meet you all.
Yeah. Thanks everyone.